Good morning, and aloha. I got two Hawaiians in my room tonight. Very happy. Welcome, Ohana. How's everybody doing? Hey, Stealth, Tibby. How are you guys? I left everything, not just because I'm lazy. I'm behind. I just wanted you guys to see what I do every morning for prep. So every morning, do the same exact thing. Right? I go and look at this chart, which tells me where the inventory is. Now I want you to notice something. You can see that the close is here, right? You can see the market closed here, right? And then you can see the overnight low is right here. The other thing you guys can see, hey Martin, welcome to the folks on YouTube. See the blue where it turns from blue to green? The blue is what they call the value area, right? Now, that's a very sort of, it's not a specific term, right? So I call this the cost basis. This is where 70% of the inventory from yesterday was traded. So you'll notice something very interesting, that the overnight low and the close are right at the bottom of yesterday's cost basis, right? What does that tell you? Now, what is the practical information that that tells you? Good morning, everyone. I'm just getting into this really, really quickly before I forget things. The, the information that this tells you is it's still business as usual. Once we get underneath the cost basis, we're into the discount zone. See what I mean? And yesterday's low in this market, these things are, well, these little details that a lot of traders miss. Now, you don't have to be a market profile trader. You can run volume profiles and get the same info. It's not as glaringly clear. That's why I like this market profile stuff, because right away you can see where the inventory is. And I'm an inventory guy. And you guys should be inventory people too, right? Because everybody says, oh, you're a supply and demand trader, you're an inventory trader, you're an order flow trader. Yeah, well, guess what? So are you. You just don't know it. They're like, no, no, I trade fibs. Yeah, there would be no fibs if there was no inventory and there was no order flow. Right? So there's the close. Our overnight inventory is, what would you say the inventory is? It's 100% long, or 99.9% long, because all of the trading is above yesterday's close. What that means is the traders from yesterday who absorbed the selling, right? When the market sells off at the end of the day, the traders who are wholesalers, they buy all the cheap inventory, right? And then they try and get rid of it at night, right? I want you guys to think of stale hot dogs being sold at night outside the bar to drunk people, right? They're desperate, they'll buy them, right? So that's what's going on, and that's why we have this support at yesterday's close. Because underneath yesterday's close are all the unfortunate people who followed price down and got trapped. Now, this happens very, very, very often in markets. In markets that are in an uptrend, when they liquidate, people follow price and they always short at the bottom. And those people become our support in the next session. That's why the overnight low in every session tells you where the bid is. Now, in half an hour, London's going to come along and it's going to test that bid, maybe even sooner, right? Maybe even sooner. So let's go take a look and see. Right, there's the close, and you'll see the overnight low is just right there, right? Yeah, so because 2 days ago we had that P profile and we had those shorts trapped, we went and filled the last set of single prints late in the day. Didn't I tell you guys yesterday, and I'm not a told you so guy, but I'm going to say I told you so. I said the market's going to stay up for as long as it can, and at the end of the day, there might be some liquidation, and boom, there it is, right? That's why it's not good to get too short too early, right? Because the problem is when there is a short bid, right, the market will come down to that short bid and tease them and go, psych, psych, right? And yesterday, it came down to that short bid to the tick almost and pulled right up. And the people who were bid here got filled, but the people who didn't chased price and pushed it all the way up into the close. And those people are holding the market higher while we get rid of all the cheap stuff that we bought here. We're getting rid of it at night. That's why I like market profile. But what I don't like about market profile is all the flowery talk and all the double talk that most of the teachers talk about because they don't tell you where to take the trade and why, right? So this is the map of our city, right? Now, if we want to trade this area, we go in and we zoom in using a 1-minute candle chart, and you can see exactly what's going on in that neighborhood. Does that make sense to you guys? Map of the city, so now you know where you are in the city. So now you go into that neighborhood. So if this was Hawaii, right? This is a map of the city, and here we are, let's say in Nu'uanu, right? My old neighborhood, right? Right? We're in Nu'uanu, we're here, right? You know? Or all my rich friends who lived in Kahala, they were up here. Hey, I know where the Rainbow Drive-In is by memory. Spent one too many times in that place. So that's what we're looking at tonight. We're still inside yesterday's range. I think, not that I'm short biased, but these moves that we have in this market, I find that they go up and they get taken back the next day, right? Look at these ranges that we've been having in this thing. Look how massive it is, right? When markets do these huge moves up and down and up and down, right? It's pure speculation, right? Now, for those of you, remember I said we did a look below and fail of 67.88, right? This level, right? So the two big levels that longer term traders are looking for. We did a look below and fail of 67.88. Here we did a look above and fail of 70.30. So because of this, and I could see selling at that overnight high, I'm looking for failure to get to 70.30 means rotation back down. Hey, Charles. Charles in charge. How you doing? I still remember that TV show. So we did a look up below and fail, and our target was 70.30, but we just couldn't get there, right? We couldn't get there. Exactly. That's selling competition. Bingo, right? So you have all these people who are long here, and what they do is they start selling, and then they start marking down price. Like Charles goes, okay, I'll sell under 7,000, and I'll go, okay, I'm going to undercut you, and then Cisco undercuts me, and then Dano undercuts everyone, right? And that causes price to be marked down. Just like Walmart will price compete with Costco, and then Costco will price. Who are the retailers in the States anymore? I know Kmart doesn't exist. Target. So they all start price competing, right? And lowering the price, right? So That's what we're looking for tonight. I'm looking for a break of that overnight low. Let's go dig in and let's see what they got in the tickle trunk. Oh, and I should open up my trading platform. Stay with me. Okay. So there's that overnight low. They're the single prints that we went and we filled in M period. So yesterday's low, where's my sticker for yesterday's low? Previous day low. Yesterday's low is right here. Right? So this area here, this is the good stuff. Right? Now we need to know what's lurking down here. London, when London opens in 16 minutes, London will generally, and I use that word, generally London will try and go lower and get that cheap inventory, right? Right? Grab the cheap paper. That's what the market's all about, right? How to spot selling competition for scalping? Rocky, please say I did not pay you to ask that question. Boy, do I have a deal for you. Okay? It's like he asked right on time. You couldn't have timed that more perfectly, my friend. It's almost like I paid you to ask that question. How do you spot selling when you're competition when you're scalping? The simplest way to see selling competition, check this out. It's simple, and guess what? It's free. All you have to do is train your eye to see it. Okay, check this out. Do you see this level here, how the market went above and came in? Let me expand on this and zoom out. This is so cool. Do you see this candle here? And then you see these two candles. Now don't get caught up in wicks and twicks and bwicks. Just look at the top of the candle, right? It's not red candles, Martin. Don't worry about the color. Look at the top of the candle. I'm going to clear things up for you guys so quickly. It's going to completely change your life, okay? And this is where no other trader will ever teach you this, because no other trader has ever been the top of the candle. The top of the candle is where the large traders initiate and start to compete. So if you look at this candle here, then the next one's lower, and you'll notice the next one can't take out the top of that one. That means the offer is moved down, then the offer is moved down, then the offer. That means selling competition. That's why you trend line guys have a trend line that goes lower, because the offer is moving lower, which means price is being put on sale because sellers are competing. So once we come up to this level at 76, if you were long here at 73, you will expect selling at that level, because size traders will always sell at the same level again. Why? Because they have inventory at that level. So what you do is you mark that level. So if you're long, say you're long 74, you'd put an order there right under that 76 and get sold. If the market lifts above that, that means the sellers have seen buyers, and your next sellers will be up here. If there's a lot of sellers at that level, it won't hit that level, or it'll stop stone cold dead there and then reverse. Sometimes it'll go above that level and come back in. But you see how the offer is lifting and they're taking it? Watch the red line. Watch the birdie. The offer is what sets the price. Buyers follow price, right? Except when they all run away. Then sellers have to put it on sale. See, look. See, look. See? Watch the offer. Watch the offer. Now, does somebody take the offer? Because if nobody takes the offer, that offer will come back down. Nope, somebody took it at 76.75. Next level will be 77. Let's see if the offer will lift. That means the orders in the book have been cleaned out. You don't need a trading DOM. All you need is this. Boom, to the tick. Next seller. Here, next seller. Here. As you can see, we knew that there would be sellers here. So if you were long 74 and say you were long 5 contracts, I would have surely been out of by 3 of them by here. And then I would put another one here and another one here right before that level and it'd be out. That way you train yourself to sell into strength. See how the sellers moved lower to 76.5? See, watch the offer move back and forth. In Globex, it's nice and slow. You can see it clearly. You can pause the chart, rewind it. Chart replay is your best friend. Do you see how there's selling competition at 76.5? Rocky? Beautiful question, Rocky. You get the prize for the best timed question. So what does this tell us on a larger scale? The buyers who are here moved their bid up here because if you look at the market profile chart was just a fancy half-hour candle. You can see that J period couldn't tag the close. So the bids went from here, up here, and now in K period, they're up here. See? Bid, bid, bid. What is the danger in just spamming sells at the tops of the falling candle tops? I don't understand the question, brother. You want to have your sell order underneath the top of that candle. If you know there's a seller at 77, go 76.5. Front running, baby. After COVID, that's a good question, Mohammed. Yeah, ES was very thick. And now they didn't go anywhere. They're still there. They're just smarter. They changed their way of doing things because the ranges got bigger. You can't be thick in a market that's 100, 200 points in range, Mohammed. You have to understand that traders only have a certain amount of capital. Think of the market range as a piece of bread and your capital as a spoon of peanut butter. If the bread gets bigger, you have to spread that peanut butter thin. Yeah, so like Mike, it's really simple, Mike. You're long 74, your stop is 73. You sell some at the top, just front run the top of all the candles on the way back up. See how simple it is? Yeah, they had to change the way business was done. And also you got to remember that the new algorithmic nature of markets, right? These markets are electronically traded. So what happens when you look at an order book, right? If a large order comes in to a market, the order book just empties out because nobody wants to take risk into that order, right? Nobody wants to needlessly risk money. The only people who want to risk money needlessly are retail, unfortunately. And they're the only people who can't afford to risk money, right? Because they don't understand. Now you guys understand, right? Smart money manages risk first, then worries about profits. Because smart money is long-term greedy. Retail is short-term greedy. And that's the difference. That's what I want to teach you guys, how to be long-term greedy. Make a little bit here, make a little bit there, but continue making and losing less and less and less. The less you lose, yeah. The first thing, when you get into a trade, you have to know where your exit is. Just like when you get onto an airplane And the stewardess is like the exits are here, here, and here. You have to have that when you're in a trade. You need to know where your exit is before you even get into it. Right? And your risk always has to be structural. So your risk is based on where does this trade not make sense. So if you were long at 74 or 75, if the market goes under 73 and a half, 73, the trade doesn't make sense anymore, right? Because you're buying inventory at 75 to go sell at 76, 77. Now, if somebody offers that inventory, the same inventory, at 73 and a half, 73, 72 and a half, your inventory is mispriced. This is the only business where you can insure your transaction. Like, if you buy a house, there's no stop. If you buy, any other, if you buy a car, there's no stop on that car, right? So here, you can insure your transaction. Now look at 74. Do you see how the bottom of those three candles are all at 74? There's buyers at 74 half. That's because there's buyers underneath. So the market pauses there and tries to get those buyers to pay up. See how the offer lifts? So if they follow, they'll be selling competition at the top of the next two candles. It's so slow today that you can see this, right? See how the sellers moved the offer down from 75 to 74 and a half? That's how you can tell sellers are competing. It's beautiful. And it's cheap because it's free. All you guys have to do is to be able to draw a straight line and pay attention. Now, how's that for trading, right? Then what you do is once you understand that, we wrap a trading business plan around this, right? Boom, back to 73 half. Right to where we started. Friends, these are called rotations. These are rotations. What are we rotating? We're rotating inventory. Just like a car dealer. Yeah. Make your money, right? When you first start trading, don't look for 20 or 30 point trades. Look for 3-point trades. Because look, if you had bought 74 or 74 and a half, 75, and you'd popped out at 76, 76 and a half, you made 2 points. People are like, JJ, I can't live on 2 points. Well, why don't you learn how to make 2 points and keep it before you try and make 20? Because 2 points on one E-mini is $100. On 3 contracts, that's $300, right? On 5 contracts, that's $500. And if you do a $500 trade every day, that's 10 grand a month in extra income. And how many of you are making 10 grand a month consistently? You don't need to swing for the fences. I want you guys to get paid first. Once you get paid and you build up some skill, right? Then you'll be able to take longer term trades with bigger size, all that good stuff. But don't let yourself get scammed by all these people on YouTube who are telling you, you know, yeah, very good, Cisco. There's nothing wrong with trading for income. It gets ridiculed a lot. But then you see the people who ridicule it. Oh, I lost 300 grand shorting Tesla. If you were on my desk and you took a hit like that, you'd be fired, right? Because in the industry, you're not allowed to lose money like that. That's not acceptable. You know? And now, look what the market's doing. Here's another lesson. Look at the candles. Look how small they are. That means business is slowing down. The smaller the candle, the slower the business. The bigger the candle, the bigger the order. So when the market comes to a level and starts chopping around with these tiny ass candles, excuse my language, right? Leave it alone, right? If you're a gun to your head trader and you're long, your stop is going to be under the bottom of this red candle here, right? Nice work, Martin, right? And you know that there's going to be sellers all the way up. So manage your expectations. Also, London's going to open in 60 seconds. So when London opens, it could be a little volatile, right? Sometimes London opens, it's not volatile at all. Sometimes it is. We don't know what's going to happen until it does. See? Right? If you map out where your sellers are going to be, you're going to be so much better off if you're long because you know, okay, I'm long 74. I know there's going to be selling at 75, and London's going to open at 25 seconds, and London loves to push it lower. Let's see what happens today. This way, ladies and gentlemen, you manage your expectations. And if you can manage your expectations, you lose less money. And when you start losing less money, you now have a shot of making more money. Boom, there's London. Let's see what it does. Oh, tried to get lower. No love for London lower this morning, so they had to, right? London came in with a little short covering. Now let's see where they sell into it. Aha. Right at 75, there's a seller. Can we get up to 76? Ooh, going begging. Come on, print that 76. Nobody's taking that 76 offer, so they lower the offer. The sellers set the price. You have to remember that. The sellers set the price according to the flow of customers coming into the store. You don't know what's going to happen, Mike. That's why it's very hard to automate these things as a retail trader. Automation works with firms because they have unlimited amounts of capital and they can be wrong, right? If these firms are offside, if they're trading, if they've got a $20 million position and they're offside 5 grand, 10 grand here and there, it's no big deal. But where we can't afford to have that level of error that they can. They have, because they're larger institutions, they have, yeah, that's why automated trading for retail traders is a fool's game. You got to get in there and stick your hands in there, right? Automated trading for retail traders is really hard because you just don't have a level of error baked in. See, like right now, I wouldn't trade this because it's too choppy. The thing too is it's very hard to automate a strategy. What I would say is if you can do that strategy manually, then you can automate it. If you can't do it manually, it's going to be so hard to automate something that you can't do manually. And nothing works all the time, but The problem is the algo doesn't know how to differentiate the different types of order flow and not execute where you have that discretion. One day, AI will have that, right? AI will be go, oh, these candles are too small. Let's not take the trade. Or it's choppy. Let's not take the trade. Or they're working out this level. Let's not take the trade, right? Maybe it's at that point. I don't know, right? I don't know, right? I love technology, but for us down here at the retail level, sometimes we have to like get out the shovel and dig our own ditch. The problem with automation is it does not have situational awareness that I know of. I'm sure with the advent of this new AI and this new technology, it'll get there. But right now, there's no situational awareness, right? Right? And I don't know anything about coding, so that's why I haven't been able to help you with that. That's why I recommend you take the coding and put it on a shelf and just trade manually, right? I don't know, maybe if you had a Cray supercomputer, do those things still exist? Probably exists in a desktop now, right? But, that's why I love automation and I love algorithms and all that stuff. I don't understand them, but what I like about them is the precision, because there's going to be a seller at 75 and a quarter, and boom, there they are, right? Where I drew that white line, there was no automation there, right? I knew that there was going to be a seller at 75 and a quarter, and there they are, right? Now, someone yesterday asked me, how can you so precisely know where the seller is? It's because I've been watching this for 18 hours a day since 2012. And it's taken me all of that time to figure out how to do this and keep it simple, and then try and teach it in a way that you guys can simplify your business so you can actually earn a living. Because everything else is noise and garbage, right? And there's nothing wrong with sophisticated trading, but how can you be sophisticated if you don't understand the basics? Then the basics of trading are, where are the sellers selling and where do they stop selling, right? We need to understand basic human anatomy before we can be heart surgeons, right? In every profession, you got to start somewhere, right? So that's what I do when I teach people, when I coach people. We work on building the basics. It's like building a foundation for a house. Once you build a solid foundation, you're good to go. We can build on that. And the thing is, what we have to do is, at places like this, like right now, the market's trying to work out that low. You know that there's shorts trapped under 70, and the inventory right now is above us. So we have selling pressure. You can see that the tops of those candles get lower and lower. But do you see how choppy it is? This is a place where you want to let the large traders work this out. Those of you who live in places where there's snow, let the snow plows clear the road before you get on it. You know what I mean? Right? Let the large traders, they're like the snow plow and the sanding trucks. You let them go and clear the road, and then take your trade. Right? Never be a part of price discovery, because price discovery is violent and expensive. Right? Hey, Sandy, good to see you. Right? This is why I'm curious. I want to see what's lurking underneath 70. So say if I was short at 75 now, me, I'm conservative. I would have covered here close to the close because I know there's going to be some buy orders, right? If you are a larger trader, I'd put some orders just around the close, that overnight low. Like I'd go 70, 69 and a half, 69 and three quarters. And if those bids don't get filled, then you cover. Now you use your orders to tell you about the price action. That's the only real way to know. Because on a chart, on a sim, you could have a bid there that gets filled. In reality, that bid might not get filled. So there we go. We took the close by one tick and popped back up. You see how it's going back and forth here? For me, that's enough. If I was short 74, 75, I'd take my 3, 4 points, right? Larger traders, longer time frame, stick some bids at 69, 68, right? Now, if you have a 70 bid and it doesn't get filled, then the market's trying to tell you that they don't need to sell at 70. Watch the offer, right? And if the offer starts moving higher, then you know you might have to pay a little bit more. But if the offer starts moving lower, can we offer and stay underneath the close? The close is now your reference. If you're short, watch the offer, right? Come on now. Come on. There we go. There we go. Offered under the close. Good, good, good. Can we get a print at 70? Boom, there's a print. 11 contracts, 20 contracts. Cisco, if your order was in early, you should be filled. There, now you're filled. See? Beautiful. Way to bottom fish that last tick. Nice. Right, now, where should your next orders be if you're short? The next stop is going to be here. Hang on, let me go grab it. The next stop is going to be at that O low, which is 64 and a half. So if we stay under the overnight low, right? If we stay under here, the sell orders should start competing because we'll have a seller here competing and they'll start moving lower, right? Let's see if they do that. If we accept over the overnight low and get back up over the close, right, and stay over the close, then we'll rotate back up. This will tell us this is price discovery because right now we want to find out how big is the bid here. And no DOM is ever going to tell us how big the bid is because no large trader is ever going to show their orders on a DOM. They'd be clinically insane to tell you, oh, I'm a buyer of 1 million contracts here. No, that's not how it works, right? No trader in his right mind is going to tell the market where they're buying or selling. That's career suicide. So all of those people who are looking at order books and order clusters and all of that, they're all getting scammed. That'd be like a poker player showing you his cards going, is this a good hand? Right? I don't even know anything about poker, and I know that's not a smart thing to do. Right? So don't fall for all that order flow software bullshit. Excuse my language. The 1 minute candle chart will tell you where the sellers are. Look, there's a seller at 71. How hard is it to draw a straight line? Put them at the top of the candles on the way up. This is the simplest way to look at a chart. The size traders will have inventory at 71. If you don't know what inventory is, you must remember you're in a market. And the dealers and the large traders have inventory of product. Right? And where they sold before, they will sell again. Why? Because there were buyers there. Right? Here we go. What does the 1 minute tell you that the 2 minute doesn't? It's just more precise. I've never tried a 2 minute. If a 2 minute works for you, go ahead and use it. I've tried 1 minute and a 30 second. 30 second, here's the problem with me on 30-second charts is I tend to overtrade. I found, like Goldilocks and the porridge, right? I find 1 minute is just right, right? Experiment and see what works for you. You can use my method on any time frame. And to be fair, it's not my method. It's the method of the business. I didn't invent this stuff, guys. This is nothing I've invented. All I'm doing is I'm taking about 1,000 years of trading history and trying to translate it into modern terms so you guys can use it effectively. I didn't invent any of this stuff, right? All I've done is figured out a way to communicate it in a simple way to you guys. That's all. This has been around for thousands of years. I'm a quick trader. Usually my trades last 30 to 90 seconds. I do take longer time frame trades, but not when I'm teaching because I can't focus and concentrate and trade size. I could make markets and talk, but I can't retail trade and talk and trade size. It's just not fair to my clients to be distracted. I need to be dialed in. Yeah, I don't know how to gauge speed off the EMAs. That's completely foreign to me. Blade Man, I'm a very, very blue collar trader. Right? Where's the bid? Where's the offer? Where am I going to do business? How am I going to do business? Where's my out? Where's my risk? That's all I care about. Very simple. I'm a simple guy. The more stuff you put in the soup, EMAs and this and that and fibs and dibs and quibs, some people's charts look like a Jackson Pollock painting. I like a nice simple chart. I can tell, like, it's so simple. The offer is moving from 71 to 70 to 69 to 68. Sellers are putting price on sale, right? They want to get rid of their product. Go with. It's a slow drip down because there's so many bids down there, but there's not a lot of size, so it's slowly dripping down. Like maple syrup from a Canadian tree in the middle of winter. Yeah, I don't even know what EMA velocity is, man. That's above my pay grade, brother. And we'd never use that on a trade desk. It's way too complicated. By the time you figure all that shit out, the trade's gone and your client fires you. You guys got to understand it. In the business, you don't have time for all these niceties, right? EMA velocity and all that stuff. It's just there's no time. There's no time. You guys have no idea when a client is trying to sell 1 million shares of stock and you're trying to move it out. You got somebody screaming on the phone at you. You can't be fucking around with EMAs and oh, maybe I'll try velocity and maybe the tangential, you know, let's look at Euclidean geometry. It's all bullshit. You're fired. Right? Do you have any idea what happens if you miss a bid? You can't be screwing around with all that shit. You got to get to business, man. You got to get to work, right? You guys have no clue what it's like. You guys have no clue what it's like to be sitting on a desk and having somebody screaming at you because you haven't got the trade done in 30 seconds or less. And that's phone trading. That's not clicking buttons, right? There's stuff that you guys do, and then there's the real world. I operate in the real world. There's that. There you go, Cisco. There you go. Right? The stuff I do is real world. It's because my clients are billionaires and they expect results. I don't have time to screw around and test theories, right? Just look for the top. Just look at the top of the candle, right? It's not rocket science. The sellers were here, now they're here, right? When the sellers lower price, don't go long, right? We don't have time to screw around. It could. I'd be looking for the previous day low. If we get underneath 64 and stay under 64, right? Then I'll be looking for yesterday's low. You see, you guys have the luxury of pontificating. When there's millions of dollars on the table, you don't have that luxury. That's why I try and instill on you guys a sense of urgency. Get in, get out, get paid. Stop screwing around with all this overcomplicated BS. We're finding the bid. Keep it simple, folks. You don't need to overcomplicate this. Let's say if you're making 10 grand a day, then you can go and try and put, then you can go and try and do other things. But if you're not making 5 to 10 grand a day consistently, why are you screwing around? Why don't you just do something simple and make your money? Right? Doesn't make any sense. If you're not booking $5,000 to $10,000 a day consistently, why are you trying to overcomplicate things? I'm just trying to teach you the business. You got to remember, Blade Man, I've been doing this for 34 years. I've taken 200 companies public, and I've traded billions and billions of dollars in order flow. So, you put a million shares in a market And I'll trade around you so much you won't even know if you're coming or going. You'll never see me coming. So I'm trying to teach you guys how the business works so you can trade in it and not get destroyed. Right? First, learn how not to lose money, learn how the market works, then build a business plan that's simple. Right? Keep it simple. The more complicated, the more indecision you're going to have, the worse your execution is going to be. I prefer the term villain, Cisco. Right? All you need to do is focus on your setup. As a retail trader, there are terms and conditions, right, that you need to do business under. When those terms and conditions are met, you execute ruthlessly. If those terms and conditions are not met, you keep your capital to yourself and you wait until those terms and conditions are met. If you don't know what those terms and conditions are, I would love you guys to come into our trading room and we'll teach you. Right? We'll teach you. We won't give you any BS. We won't give you any runaround. We'll teach you how to make a living. It's just an inventory correction. It's not a sell-off. Inventory is long, it corrected down. Very simple. Let's see if we can get up to the close. There should be a seller at the close. Yeah, it's not a sell-off. It's just an inventory correction. Unfortunate thing is people don't talk about inventory because they've never had one. Every professional trader has had an inventory. Every professional trader knows what inventory is. Creeping above the close, this is what we call an inventory correction. The sell orders that took us underneath 69.73 are completed under 66. The market will now rotate higher to find sellers. This is the cost basis. This is a small short-term cost basis. And we're going to take this and we're going to sell it. See how there's sellers here? We stop there to the tick. See? It's not rocket science. And if enough people shorted under 67, they're going to push price all the way back up to 73.5. Simple, simple, simple. That's pretty much it for me this morning, folks. A high volume node is a cost basis. See, I mean, when you tell people high volume node, it doesn't really tell them anything. If you tell them this is a cost basis, this is where they paid for their crap. See how simple it is? People have taken this and they've prostituted all the terminology to make this really complicated stuff to keep people confused. Value areas, high volume nodes. Like, what do you guys? We're looking at lymph glands? You know, are these lymph nodes? No, man. It's a cost basis. You buy 100 oranges and you pay 50 cents. You try and sell them for 60, 70, 80 cents. No, no. Uh, you know, it's a business. The chart is a sales chart. Don't overcomplicate it, right? No. If I wasn't on screen with you guys, I might have, but probably not. Everything I do is practical. There has to be a common sense reason for doing it, so you know a common sense reason for getting out, right? The other thing too is you got to admit you're wrong quick. The faster you admit you're wrong, the less money you lose. We're going to be wrong lots. It happens. Alrighty, folks, have a wonderful morning. We will see you at 9 a.m. Eastern Time for our next session. Stay out of trouble. Appreciate you guys for being with us. And as usual, do not take candy from strange market makers. Thanks, everyone. Have a wonderful morning. Bye for now.